Anheuser-Busch InBev reported better than expected profit and revenue for the fourth quarter, but the beer brewer said it could face some profit margin pressure in the year ahead. Joining us now, Anheuser-Busch InBev CEO Carlos Brito. And Carlos, you thank all your employees and everyone that's been trying to navigate through this period. And you're gratified with the results. Stock's down a little, but it's been tough. What were the highlights in your view in how the company reacted to the pandemic in the latest quarter?
Well, thanks for having me. We're very glad with especially the second half of last year, 2020. In the first half, as you might remember, there were a lot of government-mandated shutdowns. In some countries, we were shut down in terms of business for 1 month, 2 months, couldn't sell any beer. So the fact that the second half, some of those restrictions were eased. If you look at our second half, our volume went back to growth on a global basis. We grew more than 2%, even with restrictions still here and there. But the moment consumers could navigate the restrictions that were eased a bit, they found ways of getting occasions more in the home. And for me, what was amazing was that not only our people were very agile as channels shift and consumer patterns shift, but also the platforms we've been investing for the past 5 years in terms of B2B and B2C, the level of adoption of those platforms because of social distancing by our customers and consumers went through the roof. So that was also a testament of how important it is to have a strong portfolio, but also these days to have a digital way to connect customers and consumers.
You point out it's hard to imagine that AB InBev is a stay-at-home stock, obviously, but consumers did adapt in terms of online ordering and staying at home and having beers, obviously, but no way to overcome the not having pubs and bars and restaurants. There's no way to make that up, is there, Carlos?
No, you're right. I mean, when you look at total volume, of course, volume was down, especially in the first half, as said before. The second half, volume grew again because the restrictions were eased a bit. It's different country by country. For example, in the U.S., where bars and restaurants are very small in terms of the overall volume, consumers adapted well, and a lot of the occasions that used to be in bars and restaurants migrated to the home. The home became the big hub for not just living, but working and also entertaining. And we use our in-house draft line agency to really stream content to consumer homes in terms of entertainment, workouts, music, everything we could do to help our consumers so they wouldn't be too bored by staying home the whole time. But whenever you do consumer research, and we can see that in China, because China is ahead of the other countries in terms of riding this COVID and what comes after COVID, is that consumers are really looking forward to a time where they could go again to a sports ball, to a ball game in the stadium, to their bars and meet physically their friends, to traveling. So all those things are going to be there. But I think convenience is something that will remain in their habits. They like the fact that during the pandemic, they had to adopt digital solutions, and we think that will remain.
Shepard Smith here. Thanks for watching CNBC on YouTube.